Finally, we'll look at common size analysis. What we look at when we have dollar results is we make good observations. For example, here we said, oh, profits doubled and sales are up, but what else happened? Common size could actually help us even further understand not only what happened, but why it happened. And here we show the basic idea of common size. If we start with the income statement, this is the income statement as we've used. This is the common size. Common size means that for income statements, you take all the line items here and you divide it by that year's amount of total revenue. And what it does is converts the column of numbers instead of being dollars to now being stated as percent of sales, right? Because you divided everything by sales. And here we see side by side the progression from 2016 to 2018. We see the progression in gross profit going up and then down a little bit, right? Good or bad, at least we were understanding his data. Then we can see more detailed information, like SG&A went from 14 to 11 to 9. That's great. They've gotten much more efficient in those 3 years. Or R&D went from 21 to 20 to 19. So they've reduced somewhat, but that's a percentage. Notice that in dollar terms, they're still over $13 billion. But since they had a great sales year, as a percent of sales, it looked smaller, but it's actually pretty good. Next is restructuring. It was a lot of money in 2016. 2.9% of sales to 0.6 to now negligible, right? Maybe even a negative number. So we finished our restructuring and it looks like things are paying off. Then we look at the bottom, provision for income tax went from 4 to down up to 17 to 3.2. Like 3.2, really low taxes. It bears investigation. There is a part of the required financial statements in the notes that requires companies to explain to you how they're able to save so much money on taxes. Here we don't know the answer of how they did it, but we know something's going on. So this points to doing some additional investigation. So let's look at an Excel sheet and look at how these numbers were derived. All right, so here's the blank Excel sheet and we'll show how to do this calculation. We take every line item, including revenue, divided by the revenue for the year, and we hit F4, which puts dollar signs. If you look at the notation, it's set E11, which is revenue, divided by E11, but with dollar signs in front of the E and 11. What that does is it locks that denominator so it does not move, which is what we're going to do. That is 100%. Makes sense. You divide a number by itself, it's 100%. Now we can copy it. So Control C and copy it all the way down to the bottom. Hit Enter. And we end up with, I'll clean up a bit. And so it says now 100% of revenues, it was 61% gross profit margin. It breaks out all the percents for the elements of operating expenses, and we end up with the same number here, right? Let me just do one thing here. I'm formatting it so it looks better, right? So next we do the same thing for 2017. It's this number divided by that number again, F4 key to lock the reference, and then we can copy it down. And now we've done the second column, and I will clean this up. And then I'll copy the formatting that we like, shade it, and hit Format Painter and paint that, right? And finally, one more time, just to show you how we can do it. And this is the same graph that we saw previously. We can do the same thing for the balance sheet, except we divide everything by total assets. So here, this number divided by total assets, F4, and that locks it down, and we copy all the way down for the entire balance sheet. And we can clean up the formatting, get rid of these extraneous zeros. And to make it look better, we can then shade the formatting we like. Hit Format Painter and put it in the same spot, and it looks good, right? So let's interpret this. It says that out of 100% of assets for Intel, that 20 some odd percent, about a quarter, were in current assets, but the bulk of the assets are in their PP&E, in their plants. And also a substantial amount of money was in goodwill, which shows that they've acquired a lot of companies. So it shows they spend money on their plants, they run their business with a fair amount of money, and they are active in acquisitions. In the other side, how did they finance the business? 14% or 13 was current liabilities, 28% in long term. So a total of 41% in 2018 was financed from debt. And the amount financed from equity has gone up from 56 to 58. So in terms of asset composition, they have a lot of money in plants and in acquisition. In terms of liabilities, they're financed pretty comfortably from equity, and that amount has actually increased over time. So they've gotten safer. So that was a common size for Intel for the balance sheet. But we could also use common size in addition to comparing one year to the other for Intel. We could use it to compare against a benchmark.